Right, so where are we? Thankfully, what I've got to talk about is short-lived. There we go. It's going to be a quick concept. It's more of a thought exercise. So I've gone over what I've got to say. Shouldn't take too long. But nonetheless, we're going to be looking at the lady in the red dress. So thank you for your patience so far. Again, we spent a lot of time doing some educational stuff on the charts and how we read them, and just give you a little bit of an insight to my thought process. So thank you for your time. So the lady in the red is, it's a veiled reference to the Matrix. The woman in the red dress, it's in the code. And the idea is that when you see this concept, it can't be unseen. So I'll pose the question to try and take you down my thinking process is, what is the opposite to bullish? And the clue is it's not bearish. So what is the opposite to bullish? And the clue is it's not bearish. So you pop a comment in the chat box, that'd be great. Any thoughts on this? So what's the opposite to bullish? And the clue is it's not bearish. Ian, thank you for your comments. I won't read them out just in case you're a little bit worried, but thank you for your comments. So it's an interesting thought exercise. It's really simple. Most of you have got it right, which is great. Yeah, absolutely. Most of you have got it right. You've heard me speak about this before, more than likely. So great. You're all on the ball. But the idea is that bearish is the inverse to bullish. It's not the opposite to bullish. So let me say that again. Bearish is the inverse. It's not the opposite. So what that means for us is that when we start to think in terms of trading options, because I'm predominantly an options trader, we get to separate directional views, which is the act of being bullish or bearish. And we can also separate the act of buying or selling, which is long and short. So previously, the old way of doing things, if you're buying stock or selling short stock and profiting from downward movements, you would be both long and bullish at the same time, because you can't do it any other way. You would be long by buying stock, and you'd be bullish is your directional viewpoint. You're going to profit if the stock goes up. Again, the old way for selling short is that you would sell short stock and you would profit from a downward movement in the market, and you'd be short and bearish at the same time, because you can only do one or the other. But in the options world, you get to separate those two things. The new way to replicate what the old way is you would be long and bullish, and you would also, in the options world, be long and bearish, because long is the act of buying. So to replicate the same thing in the options world, you would buy a call or be long calls to be bullish, and to express a bearish viewpoint, you would still be a buyer. You would be long puts, and that is the equivalent of being short stock. So long and bullish, long and bearish is the same as short and bearish and long and bullish. So you have this separation between the two things, and you can now do four things, because now what we can also do is in the world of options, you can be short is the act of selling something, in this case selling an option, and that expresses a bullish to neutral viewpoint. And you can be short and bearish, and that would be the act of short is the act of selling, and bearish is the viewpoint. So we get to separate these two things quite nicely. So let me just pause there for, I'd like to say, dramatic effect. For some people, your head might have just come clean off your shoulders with this concept. So let me just quickly draw a concept. So long is buying, short is selling. So I can be long and buy a call, and I can be long and bearish, and I'm going to stay with blue to represent that I'm buying. You could buy a put, so you're going to buy calls, buy puts. Now short, to do the same thing on the, if you're as the seller, you can be short, And that means that you're going to sell something. So to express that bullish viewpoint, then you would sell a put. So it's the other way around. And then to be short and express a bearish viewpoint, you would sell a call. Now, the great thing is that we don't need a directional viewpoint. So the other thing that comes into play, there's lots of other things. This is just an introduction to the idea. So I know that there's a lot more to this than this, but it just introduced the concept. So now there are 4 things that we can do instead of the 2 things that we could do previously. There was 2 things previously. Now there's 4 things. So we can do lots of things. We have lots of choices. So coming back to my question, wherever it is, right there. What's the opposite to bullish? Well, it's not bullish is the answer. Most of you got that right, which is great. So let's think about this. So if you're bullish, the opposite would be not bullish. So in this case, if you are bullish, then you might be long a call. You would buy a call. You'd buy something. But I can take the other side of that trade and I say, well, I don't think that's going to happen. I don't think that you'll be right and you profit from that upward movement in the stock. So I can take the opposite side of the trade, not the inverse. I'm not bearish is the point. I'm also not bullish. So the opposite is I'm not bullish. So I can sell you that call. Now, it doesn't mean that I want the stock to go down. I just will profit if it doesn't go up, which is the opposite. So if it doesn't go up, I get paid. If it goes sideways, I get paid. If the stock goes down, I'll get paid faster, but I don't need it to go down. Whereas when you buy an option, you get paid directionally. You need the stock to go up. So there's only one way to get paid if you're bullish. If you're a buyer, you've got one way to get paid. But if you're not bullish and you're selling something, then you've got the sideways way to get paid and you've got the downward way to get paid. There's actually 5 different ways that you can get paid as a seller. I'm not going to go through all of them because this is just an introduction to the concept. But at its very most basic, just thinking about the direction, of the 3 ways that you can get paid, one of them is directional bullish. You can get paid if the stock goes sideways as the seller. And if the stock does go down, you've got a 33% chance. Again, this is just thinking about direction. Again, remember, there's more than 2 ways to get paid. There's actually 5 different ways to get paid as an options seller. So just thinking about direction, which do you think would be better? Would you want to trade directionally? And nothing wrong with trade directionally. I've made it a 25-year career of trading on direction. I'm pretty good at buying the dip and selling the rallies. But sometimes it might be better to take the other side of the trade. And this is the argument for option selling. The absolute most basic way of thinking about this is as a seller of an option, then you're taking the other side of the trade. And at the very least, from a directional viewpoint, you've got 2 ways to get paid. So if you've got 1/3 as a directional trader, you've got 2/3 plus the remainder, whatever that works out to be. It's a percentage. I know there's a percentage point difference. It's 33.3% recurring, as you all know. But you've got 2/3 of the time to be right if you're not bullish. But to be bullish, you have got 1/3 probability of being right. Does everyone get this concept? Again, this is at its most basic. Again, I appreciate if you're already familiar with this, you know that there's actually more ways to get paid. It's actually better. But just thinking about the directional thing, because stock can do one of 3 things. It can go up, down, or sideways. So what we get to do, and this is the woman in the red dress. This is what I mean by when you see it, you can't unsee it. So we've got 4 choices to trade when we step into the option world, and the extra 2 are from selling options. So the opposites to being bullish is not bullish. Again, remember, bearish is the inverse. And as a seller of options, it means that we can add a few extra things. We can be the buyer or the seller. We can actually do both at the same time. You can start to stack strategies on top of each other, which is one of the things that we're spending quite a bit of time doing in our insiders community. But essentially, if it helps you kind of wrap your head around this, it's like being a bookmaker. You know, if you're betting on your team to win, your bookmaker takes the opposite side of the trade. They're saying that they don't think that your team will win, and they'll give you favorable odds based on that. Just like a casino is not necessarily playing to win. They're playing for you to lose. Just a different way of thinking about things. So this is what we're doing with options. It's not that I'm bearish. I'm just not bullish. If you are bullish, I'm not bullish. I'm going to play for you to lose, or in this case, the other person in the transaction. Does that make sense? Just give me a little, yes, Phil, I get this, or no, you've blown my head off my shoulders again. But it's an interesting concept. You know, it's the opposite to bullish is not bullish. And that means that the opposite to bearish is not bearish. And it suddenly opens up a different concept, a different perspective on how we might trade. And again, at the moment, I really like the other side of the trade idea. Again, for years, we've actually got in the main profits training program, we've actually got a lot of talk around option selling strategies. But for years, I just prefer not to do them. As we keep saying, it's not that it's a good or a bad strategy. A lot of the decisions that we have when we're thinking about trading strategies, they're all to do with what's your personal preference. It's that little secret blend of herbs and spices, that last 5% that makes up everyone's personal way of trading. And if the market conditions justify it or your viewpoint justifies it, absolutely, Duncan. Yeah, it's nice to get paid from sideways. So this is what I've introduced. Again, I've rolled it out. I'll be rolling it out as a separate strategy. It's already there. We've got the gamma running and the theta burning inside our members area. But it's all based around this principle. It's like to be bullish or not bullish. So because I like to get paid from directional trades. So I've got my way of doing it. Again, I like to get paid from direction. A good example is actually the Netflix trade. A good example is going to be MCO. You know, I like to get paid from directional movements, but it's nice to have the choice of, well, I don't need the directional movements, but if I get the directional movement, which is what we're seeing at the moment, we're seeing two extremes. It's either moving or not moving. So yeah, we've got a trend, but right now it's not moving. So we can get paid while we wait. So one of the choices, just coming back to my trade choice here, is, you know, if I wanted to get the trade on now, let's just say that I don't have the luxury of time to wait for the perfect entry setup. I might just say on MCO, which is what to kind of carry on with the analysis to kind of wrap up what we're talking about with our little lady in red, is I can buy calls. And when we're trading directionally, let me zoom in. When we're trading directionally, we've got to be a little bit right on the timing, the precision. We've got to wait for the entry patterns. So if our viewpoint is that, you know, I'm bullish, we're at the range low, and if I was to place that trade right now, then I need the directional movements. I need the stock to go up to the range high, or at least part of the way there is the way that we teach it in the training. So now that I'm thinking, okay, well, I'm bullish on the stock, that also means that I'm not bearish. So if I wanted to be the option seller, and I say, well, I don't think it's going down, but I'm not so sure it's going up yet. Because it may be that, you know, something like that happens. That's what we may be worried about, that because we're ahead of the elections, because we're a little bit worried about a sideways movement for the next 2 to 3 weeks, we might see price meander. And if we're waiting for that pattern, then it's going to be, you know, 7 to 10 days for that to set up. So maybe what I can do in the short term is, while I'm waiting for my directional trade, let me say that again, while I'm waiting for the directional trade, while I'm waiting for that to set up, as Loy said, as Jacob, as Duncan said, you can get paid while we wait. So what I can do now is to say, okay, well, I'm waiting for my I'm bullish setup for my direction trade. I'm waiting for that. But while I'm waiting, I'm going to say, you know what, I'm not bearish. So I can sell an option right there. Now, what I can also do, because the big concern with selling options is, hold on, Phil, it's undefined risk. We can do something called a spread. So you can define your risk by buying an option further out the money right there. So you've got this little profit window, and you'll have some credits that you receive. So there's the profits right there. And the rest of that spread is the risk. So is right there. So there's the risk. So what would happen is while I'm waiting for the next 2 to 3 weeks, for the next 7 to 10 days, I can sell an option. And as long as it doesn't go below my short strike, as long as it doesn't go down, I'll get paid. In fact, it could actually go down as long as it doesn't go past the option that I sell. It can go down, I'll make money. It can go sideways, I'll make money. It can go up, I'll make money. Implied volatility can contract and I'll get paid. So there's more than 3 ways so far to get paid. Usually it's a combination. So the 5th way is actually a combination. All of these things can happen at the same time and I'll get paid. And the stock doesn't actually have to move. So while I'm waiting for the directional trade, I can sell some options. Maybe I can sell the options to finance the purchase. So if I can collect enough credit here, if I can collect enough credit on that trade, it might finance the purchase. So I get a free directional trade. So I can start thinking about stacking trades as well. So this is just an introduction to the idea of the lady in red. Again, I stole the concept from the Matrix, as you can probably gather, but it's just really all around that principle of, you know, when you see the opportunity, when you see that woman in the red dress, you know, when you can see the Matrix, as it were, then you can't unsee the lady in red. If you've ever seen the movie, but the principle ultimately is if you're bullish and you don't think it's going up, then I can not be bullish and I can express that as a trade. And that's really what this comes down to. It's a really interesting concept, a really interesting idea. And again, a good example is our MCO trade. Again, we spent the first part of our session today talking about the overall market. We analyzed MCO as a potential candidate. But when we're thinking about the directional trade, it was, you know what, it's yes to the trade, but it's not today. But when we start to think about, okay, well, I'm bullish on the stock, but it's not giving me an entry for a directional trade, even with calls. I can, while I'm waiting, say, okay, well, for the moment, I'm not bearish either. You know, I'm not yet bullish, but I'm definitely not bearish because nothing new is developing. Again, remember, we've not got that breakouts that we were talking about earlier. So if I'm not bearish, then maybe I can sell the options, as we mentioned, while I'm waiting for the directional setup. Again, I can do both. I can do them all at the same time if I want, or I can do it in stages. There's lots of different ways to skin this cat. So just picking up on your comment, Laura, yes, so you've got some great ideas to get paid while you're waiting on the bigger moves. So right now we're seeing a lot of situations where you don't necessarily have to look for the directional trade. It's just MCO is a good stock that is, it's usually a good directional trader. It's just not moving at the moment. How about we go and find, I call these my swamp donkeys. How about we go and find stocks that historically don't move and haven't moved for 3, 4, 5 years? You know, you can go and find stocks that literally are dead donkeys. This is BMY, Bristol Myers Squibb. This is the weekly chart at the bottom. For several years, even with the COVID thing, for several years, since 2015, this is kind of done fuck all. You know, why don't we just think about selling? So again, it's not a case of just go and sell options. I'm still going to apply my charting knowledge to try and give me an extra edge, an extra advantage. But if you wanted to like not worry so much about the chart, so another advantage of this concept of not being bullish or not being bearish, you know, you could possibly do both, not bullish and I'm not bearish. It's going to go sideways. You could do both at the same time if you wanted. That this would be an iron condor if you wanted to kind of, go and research it. We've got a whole module on this inside the profits training program. And, it just opens up those new dimensions to think, well, if I don't need the directional move, or I'm not so worried about it, or maybe you're a little bit newer end of the spectrum, or maybe your chart reading skills aren't great. Everyone starts somewhere. My chart reading skills were awful when I started out, but that takes time and practice. If you're worried about that, maybe this is a different way of placing the trades, because sometimes it's easier to say, you know what, I'm not so sure about this. I'm not so sure that it's going up. Well, if you're not bullish, then that's now a trade choice for you, because you can go through lots of stocks that meander and drift sideways, that historically reverse and ebb and flow and generally don't go anywhere. Or right now we're seeing those two extremes where some stocks are really taking off, the COVID benefiting stocks. And then there's stocks like this one here, CVS. It's just not doing anything. And even amongst all the COVID stuff, it's just a donkey. It's not going anywhere. So maybe you can use that to your advantage. It's sometimes easier to say that this isn't going anywhere. That's an easier trade to find for some people. And we can use that to our advantage and say, you know what? It's not going anywhere. Let's try and benefit from the continued nothing. It doesn't have to do anything and you'll get paid. Anyway, that's where I'd like to finish. Once again, and as always, thank you for your time. Thank you for your attention. If you'd like some extra help with helping with any of the strategies that we talked about today to help you create your own wealth system, true wealth without worry, to master swing trading, or as we spoke about today, to not worry about whether it's going to swing at all. You can get paid from that lack of movement. The strategies that I use can typically be picked up in the next 5 to 7 days. And once mastered, you'll start to see results in the next 90 days. You don't have to stress over whether the market's going up, down, or sideways. You can profit from any direction. And as we just illustrated, it can go nowhere. Again, without spending hours flicking through the chart or reading boring company reports. If you want some assistance with any or all of that and like to talk about if what I do is right for you, I don't know until we have a chat. I honestly don't know if what I do is right for you, but let's have a conversation. Phil@antivestor.com, and at the very least, I'll always point you off in the right direction. If it is right, we can have a chat. Maybe we can have a beer. I don't know what you're doing on lockdown at the moment, but if you want some assistance, just know that it's there, or at the very least, there's someone to ask about what you should do for your next steps. I never had that when I started out. I'm very happy to help all serious traders, whether I do work with you or not. As I promised everyone, I will point you off in the right direction. But anyway, thank you for your time. That was the lady in dress, lady in red dress rather. Thank you for your time. Thank you for your attention. I'll see you all at the same time next week. And if you've got any questions or comments, by all means, just send me an email, or you can get to me directly through our Slack message and community. Once again, folks, thank you for your comments. I'm reading them all right now. I can see you all saying the thanks and all the rest of it. Thank you for your time and attention this week. I'll see you all next week.